The things that are specific to nickel that enhance that volatility is that historically stainless steel is the primary demand driver for nickel. We are going to go through some major swings as as we go in a sustained upturn, but it's not going to be it's definitely not going to be a straight line.
What has traditionally driven that volatility, and is it something that you see necessarily going forward? Because people talk about the EV revolution solving a lot of problems for a lot of companies, apparently.
Right.
So,
yes. And cancer as well.
Absolutely.
Yeah.
So what's it going to do going forward? But let's start with where this volatility has happened and why in the past.
Yeah. No, I think for investors, that's one thing to pay attention to. We are going to go through some major swings as as we go in a sustained upturn, but it's not going to be it's definitely not going to be a straight line. The things that are specific to nickel that enhance that volatility is that historically stainless steel is the primary demand driver for nickel, and they have a pricing model that basically builds in the expectation of future price increases. So what happens is you get buying behavior throughout the chain where people anticipate prices going to go up. So they stop buying, and then when they think it's going to roll over, everybody puts their hands in their pockets, waits for the price to come back, and then comes back into to the market again. So and we've seen evidence of it already. This past year, nickel got to $18,000 a ton, $8 a pound in September. And as I said when we first talked, that by the end of the year, it's going to come off probably 15 or 20%. So
explain why.
Two reasons. One, as you get a new spike in nickel prices, two things happen. One, nickel pig iron production. Basically, the Chinese producers have a bunch of ore stockpiles, and they can turn that into cash at higher nickel prices. So they take advantage of those surge in prices. It's if I can make money making NPI, I will make NPI. And the other piece of it is the stainless steel scrap chain, which is a massive source of feed. And I would again encourage people. Scrap is something that isn't talked about, but it is a huge factor in overall supply.
What is scrap precisely when you do this? Right.
So scrap is a big component of stainless steel production. So for most of the stainless steel producers in the West, more than 2/3 of their feed is scrap material of nickel containing materials. Now it's not all exactly, it's not a bunch of stainless steel knives and forks.
Sure.
It's actually a blended box of material that scrap makers make to a specific specification.
From scrap yards.
Scrap yards, and they take 10 of this, 5 of that, 4 of that, 2 of that, 1 of that, put it in a container, and that container meets the specifications that have been agreed with that stainless steel supplier. But what the entire scrap chain does, is kind of they put a little bit away, waiting for high prices to come. And when it hits their number, that scrap comes flooding into the market. So when we hit a price level this past fall that we haven't been to for 4 years, you basically have 4 years worth of people putting stuff in a corner that all comes out into the market.
Got it. So obviously nickel's come off in the last couple of weeks, 2-3 weeks, right? And you said that is possibly what you're saying the cause could be, or is?
Oh, it is, because when lots of scrap's available, then stainless steel companies don't need to buy primary nickel, and so that takes more demand out of the market. So you've had a big, and you've got more nickel pig iron in the market as the Chinese producers produce it. So
have you got a sort of sense of what the size of each of those is, the pig iron and the scrap, and how long is that going to affect the current pricing?
Yeah, I think next year is going to be sort of a tale of two halves.
Right.
It'll probably take us most of the first half of next year to get through that extra amount of scrap that's come into the market, and that extra amount of nickel pig iron. So I think prices could go another 10 to 15% lower from here. But once we work through that scrap, work through those ore stocks, and then we come out on the other side. And we I think the prices start to move higher, because once that inventory's gone, it's gone. Right. So you end up with a big restocking phase that's happened as people have to come back out and say, okay, well, I don't have these stockpiles anymore. I need to go buy even more primary material.
Yeah. You talk about this of OPEC of nickel.
Yeah.
What does that actually mean? Who are the players?
Yes. So the key realization here, I think that people are going to have to in the nickel market is Robert Freeland at the BMO conference called nickel the new gasoline, which I thought was a great phrase and is, reflects what is going to be happening as EVs move forward here. OPEC at its peak controlled about just over 50% of the market, and we remember all the things that countries and companies did to avoid that supply concentration, at that point in time. In the nickel market, Indonesia, the Philippines, and New Caledonia will control a very similar amount of global nickel supply, at that point in time. Those are three countries that have, intervened in the mining sector. Those are three countries that have, financial issues, revenue issues. So I think, the temptation for them to put some sort of export duty, some way to capture additional value for the country, is going to be just too tempting. And that will come in place, which again will make, nickel assets outside of those areas, much more attractive. Was oil outside OPEC a good investment in 1971 or 72? That was a pretty good trade for a good 20 or 25 years. So I think I think it's going to create those kind of opportunities in the nickel space.